How's it going, everybody? I'm Price Earnest Ratio, and I'm going to talk about the sell-off today, stock market sell-off. Okay, I want to get some. I want to share some other things with you all. Let me just share my screen real quick. So I've been invested in the stock market for over 10 years. I bought Nvidia back in 2017. I mean, 10 shares of Nvidia back then for $125. It went all the way up to about 2000, had a stock split. But that $1,000 investment was worth $40,000 today. You know what I mean? Or Apple back then, that's better than my Apple did. I bought $5,300 worth back in 2015 before Nvidia, and that today is like $40,000 investment. So I mean, there's more, there's other ones, but what I want to tell y'all today is that I teach long term investing. I'm not big on trading, although I do trade. I buy stock options, I sell call options, I sell put options, and all these strategies. But I never forget the cardinal rule is to the best strategy is to hold long term. Why? Because it is very, very hard to time the market. See, I like a lot of other people out there. I'm just talking about me. I'm not hating on anybody, but but I can't sit here and tell y'all to quit your job and start trading. I can't do that. You know what I mean? I won't do that. You know what I mean? Because there's a lot of people. If you there's a lot of people you go to their classes, if they tell you, okay, let me teach you how to trade and quit your job, and if you quit your job, then it's on them. That's and that's it's not feasible because if you look at here, right, look at this company. There's a company called Palantir. Okay, so Palantir. So you heard of the Warren Buffetts? Heard of Peter Lynch? Peter Lynch. These were these were long term investors. Warren Buffett came from trading. He's a trader at 13 years old, but he didn't do. He did better when he started long term investing. Why? Because he could take a large amount of money, let's say $100,000, and invest in a company that's making money, as opposed to taking $100,000 and trying to watch the market every day. I mean, all day, every day, while you have a job. Because let's just be honest. Because people have jobs. Um, you're not going to quit your job right away. And then what they don't tell you about is when you're trading, you got to stand there and look at the market all day, looking at ticker symbols. You can't do that while you're at work. So I've got an alternative to that. Well, we'll do trading later on, but my thing is I could teach you how to become a passive investor. See, those are active trade. Those are active investors. Those are traders. But passive investors are like Warren Buffett. We hold long term. You heard of Warren Buffett. You heard of Peter Lynch. These are long term investors. Well, where's the Warren Buffett of the traders? Where's the Peter Lynch of the traders? And a lot of the professional traders been trading for about 10 years. I mean, they have lots of information on that. So um I mean that they can't and that some of them still don't do that well. You understand what I'm saying? So that's the truth about it. Some traders, a very few traders are going to do well, and the ones that's doing very well, they got this expensive equipment. Let's just keep it real. They got some $50,000 expensive equipment, and they really understand how to read the charts, and they just be watching the market all day, and they have a lot of money. It's the honest truth. I don't want to spoil it for everybody. That's the honest truth. But but what the institutional investors do, and what the people that's holding your 401ks, the people that's holding your annuities, they just spend about $100 million and buy good companies like Palantir. Now I'm gonna go show you a lot of traders got beat today. They got taken to the bank, and they were day trading and stuff like that, get out of the market real quick. They don't take advantage of the upsides. You know what I mean? So if you look at this stock Palantir came out in 2021, and you read charts from left to right. As you can see right now, it's a $190 stock. But if you could look at this little white bubble right here, let's see if I can see that. It was a white bubble. It was like a rectangular a vertical rectangular box that says date, close, open, high, etc. So it tells you the date. Back in December of 2020, this stock closed at $23.55 and opened at $28.09. So if you were trading this stock, look, that means you didn't benefit from the reward of what it's doing today when it hit like $88. What this was in March of 2025. But look, but that's what I'm saying. If you were to buy and hold and buy and just buy and hold and just take a good amount of money and let it sit, you'll be the one benefiting from this, not the traders, because the traders are in and out the market, in and out the market. And honestly, traders are a lot of the traders. They're very impatient. They're very impatient and they don't believe in ownership. See, when you buy a stock, you are taking ownership in a company. You are buying a share of that company. So when they do well, beat earnings per share and stuff like that, then you benefit from the growth of the company. And if they pay dividends, you benefit from the growth of the company by a higher stock price and the dividends per share. You understand what I'm saying? So today you see something called. I want to introduce y'all to the VIX. So if you look here, let me go up a little bit. So the VIX, I did just a little bit of research. The VIX was so I'm gonna take y'all to my 1 second here. Let me take you to a few slides. We ain't gonna go through the whole thing, but we got to go through some of it so you can understand what's going on here. Okay, 1 second here. 1 second. It just loads up. So we're gonna go. Yeah. So we're here. So this is like this is a few slides. Y'all could just bear with me. So this is a crash course of understanding the VIX. What is the VIX? Real-time market index. The VIX is a live, constantly updated index that measures the market's expectations of future volatility. Tracks S&P 500 index options. The VIX is calculated based on the weighted average of the implied volatilities of a range of S&P 500 index. I ain't gonna read all this stuff, but 30-day forward-looking volatility. The VIX reflects the market's expectations of 30-day forward-looking volatility. Volatility is just like a lot of buying and selling in the market. You all can pause this, and this is just the history of it. You can pause that and read it to yourselves. I'm trying to go over this as much as possible. There's gathering S&P 500 index options, calculated implied volatilities, weighted implied volatilities, averaging the weighted implied volatilities. So you all can, I'm gonna read this right here, and you all can pause the rest of it and read it to yourselves. So gathering S&P 500 index options data. The VIX calculation starts by collecting data on a range of S&P 500 index options with near-term expiration dates. That's what it. See, as I'm teaching y'all, I'm still reiterating some of this stuff to myself. And as I'm teaching, if you want to become, they always say, if you want to become a better, if you want to know and understand something, teach it. So even though I don't understand everything about the stock market, but I know a lot about it. So I'm not one of those cocky teachers or investors who are going to say I know everything there is to know about it, because you're always learning. So anyway, these options include both call and put options spanning a variety of strike prices. So they're talking about options right here. And we're going to skip a lot of this stuff because just getting you all used to this word VIX or terminology. Growth of $10,000 investment. Interpreting the VIX. The VIX or the CBOE, that's Chicago Board of Exchange Volatility Index, is a crucial indicator that reflects the market's expectations of 30-day forward-looking volatility based on S&P 500 index options. A higher VIX level signifies greater perceived volatility in the market, while a lower VIX level suggests lower perceived volatility. Okay, let me take you all here real quick. 1 second. So the VIX today was 19, and anything 30 and over. This is the greed and fear index. So anytime this thing reached 30, people are afraid. It's a lot of greed in the market, and people are afraid. So you'll start seeing a sell off in a market like today. But the good thing about today is that this volatility index VIX that measures fear and greed in the market. It wasn't up. It's not up to 30. So what this did just tell me today, okay, this probably was a day where people were just taking profits. It was a down day, and some of the stocks, a lot of the stocks got hit. The, all three major indices were down. The Nasdaq, the QQQ, that's P500, the SPY index, and the Dow Jones DIA. They all were down today. I think they were all down. I think the Dow Jones is up, but it's nothing to be scared of because this this VIX wasn't over 30. Anytime that gets 30 and up, then you kind of want to be afraid of stuff like that. But then again, if you're a long-term investor, you're not worried about that. The people who worry about this is the traders because they're buying and selling. They're buying and selling. They can't. They try hard to time the market and they just can't. You know, I haven't. They'll lie to you. A lot of them going to lie to you. I'm not in the business of lying. So look at the VIX in volatility index in the 2020 crash. Let's see. 1 second. I'm trying to. Oh man. Okay. It got a little black. Just bear with me real quick. It was I'm gonna show you how. This is here, right here. So right here. So I'm gonna go up a little bit. So if you look at this article, this was like March 16th, 2020, 5:17 p.m. Eastern time. That's 2:17 East p.m. Pacific time. That's where I'm in. So this is where COVID happened. So as you can see here, Wall Street's let me see. Excuse me. Let me go up a little bit so I can tune in. So Wall Street's fear gauge closes at highest level ever, surpassing even financial crisis peak. So the CBOE Volatility Index, Chicago Board and Exchange, known as the VIX, surged nearly 25 points to close at a record high of 82.69, surpassing the peak level of 80.74 in November of 2008. So this VIX index was worse than the 2008 crash. You remember what happened? This was like 2008 market crash, real estate crash, everything crashed. You know what I mean? The VIX, which tracks the 30-day implied volatility of the S&P 500, more than doubled in March alone. So this was like when the COVID happened, the VIX was at 82.69. 82.69. That's bad. Of course that's bad because anything over 30 is like bad. But if you look at today, right? If you look at it today, this is today right here. Um, this is today. It was at 19. So I'm not really too afraid because I'm a long-term investor. I do trade on the side, but buy options and stuff like that, perform iron condors and stuff like that. But I believe in holding long term in the end, long term wins. So let's go back to the learn more a little bit more about the VIX. A few more slides. Like as y'all see, I'm not going through everything, but I'm just going through some of this. And you can always pause this back and listen to it. So look at here. VIX levels and market conditions. VIX levels and corresponding market conditions. Low volatility is at a 10. Normal volatility is at 15. A high volatility, the VIX is be at 30. Market stress is at 40. In 2020, which we just seen, March 17, the VIX was at 82. Yeah, it was a big sell-off. Everybody felt it. Everybody portfolios crashed, went down by like 40, 50%. But like I said, if you come today, there was a market sellout today, and look what it's at. It's at 19. So I'm not worried about this sell-off today. And I'm not worried about it. So let's go back to finish up these slides. Okay. So VIX levels and market conditions. Past that. Y'all can pause this. I'm not going to read the whole thing. VIX-based investment strategies, VIX futures. VIX futures allow investors to take a position on the future direction of the VIX index, enabling them to hedge against market volatility or speculate on changes in the market sentiment. So I'm not going to, you all can pause that and read it for yourselves. Impact of the VIX. So this is good stuff right here. You got the investor monitor. The VIX is widely monitored by investors as a barometer of market sentiment, providing valuable insights into investor uncertainty and risk protection and risk perception. So trader surveillance. See traders. So traders closely follow the VIX to gauge market volatility and deep trading strategies to manage risk and capitalize on market movements. Remember, these are traders that's worrying about this mostly. If you're a long-term investor, you're not too much worried about this. You're not, because you're not putting in more. You're not putting in money you can't afford to really lose. You're not putting all your money in the stock market. You're only putting a portion of it. Even real aggressive is like 30%. You're not putting 100% of your money in stocks. That's not good. That's not good investment strategy at all. Here we go. Financial media attention. The VIX is a widely reported metric in financial media, with its movements and implications regularly discussed and analyzed by financial analysts and commentators. So if you go look at CNBC.com, they're always talking about, especially on a day like today, you're going to hear this word VIX a lot. You're going to hear it a lot. So let's keep going. My phone keeps going off. I ain't worried about this. As soon as I get on, it likes to go off. Here we go. Measure of market risk. The VIX is considered a key measure of market risk, with higher VIX levels indicating greater perceived volatility and potential risk in the financial markets. Volatility management. Investors and traders use the VIX as a tool to develop strategies for managing market volatility, such as through the VIX of VIX-based products like futures and options. Let's keep going. We're not going to read the whole thing now. I'm already going a little bit too long. The VIX volatility, I think this is the last one. I think got maybe two more, or this is the last one. The VIX volatility index is a powerful tool that provides valuable insight into market sentiment and risk, enabling investors to make informed decisions and navigate the ever-changing financial landscape with greater confidence. So that's it for that. We'll need to replay that. Let's go. But I want to show y'all something. So this right here, if you look at this right here, this is ProShares Ultra Pro Short QQQ. So this is the inverse of the this is a NASDAQ. So this is a short. They're short. This is a I don't know if you could say ETF. If you see down here, this is a SQQ provides 3x inverse exposure to a modified market cap weighted index of 100, whatever, 100 listed. So the NASDAQ is like it's 100 technology companies in the NASDAQ. So whenever you see this, whenever there's a down market day, you'll see this go up. And this is the SQQQ, ticker symbol, the SQQQ. So if you ever think that the market so traders, when they think the market is going down, they'll buy options on this, or they just buy the stock outright. So yeah, they just buy the stock outright. But the inverse of this, but if you go look at this and see the max of this, look at that. So traders only use this to make money when they're trading. They're day trading. They're holding it for a day, maybe 2 days, maybe a couple of months. Not a couple of months, but a couple of days. As you see, this is not a good graph. So that's good, because stocks mainly go up. So you want to see this, because this is a bearish. This is a bearish inverse leverage index, where when the market is going down, people buy this, or traders buy this to make money when the market's going down, or you can buy put options. So, but the inverse of this is the QQQ. So that was SQQQ, right? This was SQQQ. Oh, it should say it right here. So it should say it's a short QQQ. So SQQQ. So you see that right there? Pro shares ultra short QQQ. Now, if I just minus the S, right, we have QQ Invesco QQQ. And as you can see that it was down today. But if you go to his max, look at it. Look at that. That's beautiful. It's going up just like that. So there's other ways that you can just show y'all a little things, so things about the stock market. So that's it for the day for the VIX, and I'll see y'all later. Also, if you want to join my community, hit the link below, join the community, and my Cash App is also below. Donate to the channel. Until next time, see y'all. Peace.